Hello guys, welcome back to the daily life of a day trader. Today I'm going to discuss the difference between day trading and swing trading. Many traders out there, more especially beginner forex traders, don't know the difference. They don't know the kind of trader they are. And when you don't know the kind of trader you are always bound to committing different mistakes that may cost you your account. That's why in many cases we always hear traders complaining that their trades hardly hit their take profit. This could be that they set their take profit like swing traders while trading like day traders. And in some cases, traders also complain that their stop loss are always taken out before the trade continues in their direction. This could also be that they are setting their stop loss like day traders while trading like a swing trader. So your ability to understand the difference could save you from a lot of losses and also increase your probability of making more money in the market. So without wasting much time, let's dive into it. I'll explain exactly what this means and how you can even use both of them to increase your chances of making more money in the market. So let's get into it. So before I use charts to explain the best time to trade as a day trader or a swing trader, I want to quickly explain the difference between these two terms. A day trader is someone who trades within a day. The person enters a trade today and closes the trade before today runs out, before 24 hours runs out. The person never leaves a trade over the next day. But a swing trader can leave a trade for 2 days, 3 days, weeks, months, depending on the direction of the market and where the person is targeting for the market to get to. So this is just the difference. But I'm going to show you on the chart the best time to be in the market and the best time frame to enter a trade as a day trader, and the best time frame and the best time to be in a trade as a swing trader. So let's get into it and I'll show you everything. So before we start, I want to say that it is very, very important for you to have at least basic knowledge of forex trading. Like, you're supposed to know things like demand and supply zones. You're supposed to know support and resistance levels. You're supposed to know how to determine the direction of the market structure, and some other things in trading. So if you don't know these terms, I suggest that you watch some of my videos about these particular terms to understand what is going on. But that's notwithstanding, I'm going to make this video very simple for you to understand how to trade as a swing trader and how to trade as a day trader. So we are starting with swing trading, and looking at this particular chart, this is a chart of USD CHF in a daily time frame. So as a swing trader, the best time frame to determine the direction of the market is in weekly time frame. So let's get down to weekly time frame and see what is going on there. Now, from weekly time frame, you can see that the market was in a downtrend. Okay, the market has been in a downtrend up to this level. But looking at the current direction of the market, you can see that it is creating something that looks like higher high, higher low, higher high at this particular point, suggesting that the market is gradually changing direction. All right, so the next thing that you have to do in this particular level is to divide the chart into horizontal levels. These horizontal levels is just, you have to put it at the points of support and resistance levels on the chart. So all these horizontal levels marks the support and resistance levels on this particular chart. Why do you do this? This will help you to know the next place you are targeting the market to go to and where you are expecting a swing to happen, because markets always change direction when it hits a support level or a resistance level. So having noted this, then the next place for you to actually determine when to enter a trade as a swing trader is on the daily time frame. So let's get down to daily time frame and I'll show you how you can determine when to get into a trade as a swing trader. Now, looking at the daily time frame, you can see that this is that current trend that I showed you from weekly time frame. Okay, and you can see that this particular current trend is trading within this resistance level and this support level. All right, but a lot of things happened within these particular levels. So we have a first swing, second swing, third swing. All right, so how do you determine, how do you know when to enter the market? Now, looking at this first one, right, when market came down here at the support zone, you are expecting it to push up, right? And the next level you are targeting it to get to is this supply zone. That is the next level you are expecting the market to come to. Now, in fact, you don't supposed to think more than market going beyond this level, unless the market comes here and didn't show any sign of rejection and keep moving with momentum. That is only when you expect the market to take out this particular level without returning back. But in most cases, go back to your charts and check it. Whenever market comes to a key supply level or demand level, and you see a lot of rejections that place, there is always a change of character for the market to do a kind of correction, more especially when you already know the direction of the market. Generally, when the market came here, the next level, the next swing you are expecting the market to get to is this particular resistance level. That is the next swing. But you don't expect it to immediately just go straight to this level. There will be a lot of swings before it gets to that level. And this is where supply level and the demand zone play its role. Okay, now looking at this particular level, when market came down here, I want you to look at this. All your knowledge about trading is very important in this aspect. Okay, what you see here is a chart pattern, a triangular chart pattern. All right, so let me just kind of expand it a little bit so that you see the pattern clearly. So what's happened? See, is then break of the trend line, and then a retest on the trend line. Boom. So as a swing trader, this is exactly where you're supposed to take your trade for a buy, because normally market has hit a support zone and you are expecting it to trade up to this particular supply zone, this supply level. All right, so when market comes to this particular level and you notice several rejections at this particular level, then expect the market to come back to this particular level. Okay, because the whole of this particular level will be your demand zone. So you expect the market to come back to this particular level. So this particular order block here is a key level in this market, and market returned to that place exactly. All right, so what's happened next? Now I want you to take a look at what's happened next. Look at this chart pattern that is being created here. Then break and then retest. All right, this is a clear inverted head and shoulders. A clear inverted head and shoulders pattern. Very clear. All right, so when market did that, created this, so as a swing trader, you already see that it has retest. So the next place you are targeting it to go is your resistance level. That is exactly where you should targeting the market to get to. Then you place your stop loss just below this level, and then you take profit exactly at that resistance level. Okay, this is clearly how you trade as a swing trader. So as a swing trader, you need to be wise and you need to be patient to see something tangible in the market for you to enter trade. You don't enter trade every day as a swing trader. You don't trade every day as a swing trader. It is only day traders that finds opportunity in the market to be in all these movements, because all the candles that you're seeing here in daily time frame are created in each day. So as a day trader, you can be finding opportunities for each days here and taking trades and closing it after each day. But as a swing trader, you don't need to enter trade every day. You just need to wait it for the market to give you a pattern or to show you a sign. All right, it can be chart pattern like this, it can be candlestick pattern, it can be other blocks and every other kinds of strategy used in the market. You can use it to get opportunity as a swing trader and know the exact place to place your stop loss and where you are expecting the market to go to. So the key thing to take home for swing trading is that you must be able to know the direction of the market from weekly time frame, come down to daily time frame, know your support and resistance levels, all right, and then know how to know the next direction of the market and how to use it to get different swings going to that direction. Very simple. Okay, so next thing I'm going to explain how to trade as a day trader. Now let us talk about day trading. When we speak about day trading, in day trading, everything that we already discussed in swing trading is applicable in day trading. You need to confirm the direction of the market from weekly time frame, mark out all the support and resistance level, know the current direction from weekly time frame, And then when you know all this, the next thing is to go to daily time frame and determine the current direction of the market. Now, you need to understand this, because the difference between a swing trader and a day trader is that, as I already told you, a day trader enters a trade every day. That is why the person needs to work with the current direction of the market from daily time frame. So if you look at this chart, you can see that the current direction of the market is this. This is the current direction of the market, and you're expecting the market to get to this particular level. All right. So now, when you know the current direction of the market from daily time frame, the next time frame to go to is your 4 hours time frame. Now, 4 hours time frame is the best time frame for a day trader. When you must have confirmed the direction of the market, the current direction of the market from daily time frame, then every other time frame, the best time frame that you need to be working with constantly as a day trader is your 4 hours time frame. And now, in 4 hours time frame, you need to confirm all the points of resistance and support levels depending on the direction that you are trading, the direction of the market. If you look at this is a resistance level, this is a resistance level, this is a resistance level. All right. So why did I say that this particular time frame is the best for day trading? Now, if you watch this, once market take out the next level, okay, then it will create a new high, then a return on it as a support level. Now, when the market returns on it as a support level, as a day trader, each day your focus should be on buying until the next high is taken out to create a new high. So you have to be looking for buying opportunity all this time. So each day you open the chart, you look for buying opportunity. Then when it creates new high and return to that particular support level, okay, then the next thing is to look for buying opportunities. So each day, buying opportunities. You shouldn't be looking for selling opportunities, because the current trend from daily time frame is showing that it is uptrend. You understand? So this is exactly how to trade as a day trader. Then the next thing, the particular time to confirm when to enter a trade is in 1 hour time frame. So in 1 hour time frame, you have to use all your knowledge, everything that you know about trading, your CRT strategy, that is accumulation, manipulation and distribution of candle, your order blocks, your breakup structure, all the things, that's all the knowledge you have about trading, you need to apply it here. Now let me just use this, what's happened from here to this point, to give you a clear example of what I mean by that. If you use CRT to determine what goes on here, you can see that in Asia session you have your accumulation, in the London session you have your manipulation, and in the New York session you have your distribution. So you already know the direction of the market, so you know the buyers. So you just wait for it to happen and you just enter the market. If you look at the next day after it, you already know the buyers. The buyers is uptrend. You're expecting this high to be taken out, and because of that, in Asia session you expect accumulation, in London session you expect manipulation, and in New York session you expect distribution. Now when the market hits this level, you are no longer expecting that, because at this point you are expecting a kind of a correction in the market. You understand? So that's why at this point you don't need to enter a buy, you need to see some reaction, because this is the key zone and you expect something to happen here, either a reverse or a break of it, before you now think of the next thing to do. So but this is how you trade as a day trader. This is how you find opportunity every day in the market as a day trader. Also, if you find this video useful, please don't forget to click the like button and the subscription button. This is the only way you can help us to promote this particular channel. And over here are other videos that I did about Forex trading. If you watch them, it's going to help you to understand more about Forex trading and improve your probability of winning in the market. So stay in the channel and remain profitable. See you in the next one.